Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 4th of June. I'm Daniel Lam, your host for the podcast. It is always interesting to look at the acronyms that financial markets come up with. Now, if memory serves, they seldom involve tasty food. But we got one now, TACO, i.e. Trump always chickens out. Now, this is talking about Trump always pounding a big tariff number on the table, only to retreat and scale down his demands. Now, personally, I feel that such an acronym is perhaps over-cynical. I always believe that Trump's primary motivation is to reduce the US budget deficit, which is always a tall order. He's tackling this tough topic before the deficit grows further and eventually threaten the US bond market and the US dollar in the very long run. But right now, we do see an opportunistic idea to buy long-dated US Treasuries, those with maturities of 20 years and over. So the concerns about the US fiscal health, which is exacerbated by the budget bill, have led to yields on long-term US government bonds, including those with maturities of 20 years and beyond, reaching their one-year high the week before. Near-term upside risk persists as investors continue to price in a higher term premium, the extra yield investors seek for holding longer-term bonds. Inflation expectations is the other one key factor influencing the path for yields from here. Now, the US May CPI data will start to reflect the impact of recent tariff measures. The European and Japanese long-dated government bond yields are also surging, reducing the relative attractiveness of US government bonds. Now, having said that, we believe these concerns, including over fiscal imbalances and default risk, are now overstated. We're thus of the view that long-term US yields are now attractive and the term premium is close to its peak. History tells us that governments can maintain high debt levels for extended periods without triggering a crisis. Now, more narrowly, previous budget standoffs and brinksmanship seems more political theater than signaling imminent risk of default. That is all from me for today. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.